Alright, so I'm going to show you guys how to set up your layout so you can look at your option contract in two charts. First, what you want to do is click on this grid and then go down to customize grid. You always want to add in the columns and then add in the rows. So we click on the middle button to add a second column, and then we want to add a second row. So your setup is going to look like this. Once we get everything set up, we can go down, click on customize grid, and it removes those boxes. See, click it, it's a box, uncheck it, it's gone. Alright, so on this side, we want our option contract. So we'll pull up the same one, SPA 220617P366. So that'll be on this side on the 3-minute time frame. And then here, we'll set this to 1. What's happening? Set to 1, and then set this to 1. I'm going to change the, let's see, oops. All right, so set this to unlink over here. And then we'll type in SPA. And now we'll have a SPA chart, and then an option contract. Now what we'll do is we'll change the drawing set. I have a fresh one. I'm gonna remove these bubbles because I don't like looking at them. So I'll click on that. Click on the gear. Then click on no for chart bubbles, and click no for actionable signals, then click OK, apply, OK. So at the bottom we'll have our, sheesh, things all over the place. I'll set this to the 30-minute. Well, actually, we can do 15-minute. And then we could set this to the 3-minute. At the bottom, going to remove those bubbles. All right, cool. So, let's see. All right, cool. So now we have a SPA 15-minute and a SPA 3-minute. So I want to add full time frame continuity here. So I'll click on this beaker that says edit studies, and I'll go to my set, and I'll walk you guys through how to set this up when we meet in our next session. So click add studies, and you'll see we have the 15-minute, 30-minute, the hour, 2-hour, 4-hour, the daily, the weekly, the monthly, the quarterly. That's pretty solid. I'm going to add one more for the 5-minute. So just type in FT. No, it's not right. That's it. ETF. This one here. So we'll add it. Double click it. And at the bottom we see is a new one. So we're just going to click on this gear icon. Change the time frame to 5 minutes. Click OK. And then we're just going to drag it up to the top. Where'd it go? Alright, so just drag it up. We want it to be above the 15-minute. So click apply, click OK. And now we have our 4 time frame continuity. I don't know, what is that gap for? 5, 15, 30, 1 hour. Oh, the quarter. All right, let's move that back down. All right, so have our 4 time frame continuity here, and then we'll add our volume at the bottom. So click on, make sure it's on studies, click here, then I'll add my, what is it called? It's Enigma Trade volume stats, add that in, and I'll just move this to the top in price, click apply, click OK. And now, I want to get rid of this axis here. So click on the gear icon, go to, I think it's price axis, and uncheck enable left axis. Click apply, click OK. So now we got rid of that. So now basically what it's saying, this is the daily average. This is today's average, and we're 64% within that range. So basically that means that 67 million divided by 106 million is 64%. Our last 30 bars on this particular time frame had about 2.9 million. So you can see the volume is like, it's pretty low today. The current bar for this particular chart has 1.3 million. You can't see the volume, so we'll add the volume here. Go to, we'll click on overlap volume on general, and then we'll go to equities and click show volume subgraph. We'll click on appearance. You can see, we'll click on volume to show up is blue, right? Or we can click on, that's cool as well. So click on apply. I don't like seeing it like that. I like to see it one color, but let's just leave it like that for now. So we'll do the same thing above. Click on overlap volume, go to equities, show volume graph, go to appearance, and it's already checked, is the symbol ticks, color is symbol ticks. Click apply, click OK. All right, so basically this is a pretty cool setup for looking at 2 time frames. Ideally you want to look at 4 time frames, which would be like daily, 1 hour, 15 minute, and 3 minute, or daily, 1 hour, 30 minute, and 3 minute. By having 4 time frame continuity indicator up above, we can get away with just showing 2 time frames, because we're already aware that the 5 minute through the daily are green. The weekly and monthly are red, right? So if we go to the daily time frame, we'll see that the candle is probably bullish. It should be anyway. So click on the 3 minute, go down to daily, and we can see here, this is a bullish candle, right? So go back to the 3 minute. And one thing that you guys might like is being able to separate the volume from the chart. So I'll show you how to do that as well. Basically, you go to, let's see, I think it's edit studies. Oh no, it's not it. You want to click on this gear icon, and on general, it has this option for overlap the volume. If we uncheck that, the volume will be separated from the price action like that. So we'll do the same thing below. We'll uncheck overlap volume, click on apply, click OK. Now the volume is separated. So this is a pretty cool setup. Then next we want to click on the grid and then go to save flexible grid as and click save. And that works pretty well. Another option, something else we could add to the chart is, let's see. We could add the VIX in here as well, because the VIX will help us understand what's happening with SPY. VIX gives us the inverse relationship of SPY. So what we'll do is go to the grid, click on customize, and we'll click on to add a row. And so it gets added to the bottom. Here we'll type in VIX, which is VIX. And we'll set the VIX to the 15-minute chart. And I do 15 minutes because it's the same time frame as this chart. So both of these are the same, right? So let's remove the customize box. We can remove the bubbles. You can leave them there if that's your preference, but I don't like to look at all of the information on the chart like that. I like it to be pretty clear. So I'm going to turn this off and turn this off. Click OK, click apply, click OK. And so basically what we have here is the inverse. So if I zoom in for today's price action, and I zoom down a little bit so we can see everything. And if I zoom in on the VIX for the day, you can see that basically this is the inverse. So we had a 2-2 bull here, and then we had a 2-2 bear here. So this chart basically is the inverse, which helps you a lot because, you know, it'll allow you to see when you should be getting in a trade and when you can prevent some of the chop. So here, if we look at from like maybe like here to here, we can see that this is pretty choppy. It's not a whole lot of price action happening. And that's from 12 o'clock to about 3 o'clock. So looking over here in the same window span, let's see, we get the same candle below and then go here. You can see it's pretty choppy as well. I mean, you could have got a move and let's see, scroll down. You know, you got this one here, 365 to 368. That's not a bad move. But this is the beauty of looking at the 3-minute. See, look at this one candle. On the 15-minute, it looks like pretty big, and then it goes into a bit of chop. So that's how we use the VIX, right? So this is a pretty cool setup if you just want to look at SPY, two different charts. We got full time frame continuity. We have a volume indicator to let us know what's happening with the volume. You can see the volume is pretty low. It's Friday also, so, you know, really good volume. Looks like when this number here is around 75 to 80%, then you'll know it's a lot of volume in the market. Also, you can see volume here. It tells you that we're in millions on the side. If you hover over it, it tells you how many million. So if you look at this y-axis here, I'm sorry, not the y. If you look at this number here, it'll tell you what million, 3 million. And you can see it's pretty low today. No big moves happening today. Everything's pretty low. I would say the last hour, the last 30 minutes on a Friday is when things can get kind of volatile. So, we'll see what happens at 3:30. And so what you can do here is you can type in QQQ, and then it'll change both of these charts. Let's get a new drawing set. So you'll just open up the one we just created. Boom. So with QQQ, not a lot happened today. Let's see, where do we go? Well, that was a pretty nice move. What was it? 270 to about 277. So we'll just make it a little bit bigger. And so computer's going a little slow. So you can see we had a pretty cool move in the morning, 274 down to 270, and then another move back up above 272, all the way up until about 277. So that was your trade today. That was the nice trade. This is when the daily candle went bullish. And then on the other side here, you would just type in, since the price is, let's see, price got down to a low here, so that would have been your stop. This is your entry, and then this is where you could have this would have been your first exit, and then this, since we broke the bottom of the inside bar, that was your second exit. So with that, if we look at the 3-minute chart and just zoom out a bit, just mark it. So we'll change this to stop. This is based on the 15-minute. So we'll put 15-minute stop. Then we'll put 2-2 bull, 15-minute. This would have been your entry. This would have been your first exit. So we'll put 15-minute exit. That's 001, and we'll turn the color to be white. And then as soon as we broke this inside bar to the downside, we would have definitely been out of that trade. So click edit properties, and we'll put 15-minute exit to, and we'll turn this white as well. So, pretty cool way to look at today's price action. So you would have risked $2 to make $3, or possibly $5 if you got up to the top of that first exit. If you look at the same price action on the 3-minute, our entry would have been, we had a 2 down, 2 down. We had a 2 up, but then it went bearish because it's the solid color. But as soon as we broke above that, this would have been our entry. So here, this would have been your 3-minute entry. And this is basically after we ensured that it was actually a 2-2 bull. Didn't happen immediately. So this green. And then we would have had the same stop as the 15-minute, right? Because we wouldn't have had this candle because it started up bullish and then it came back down as bearish. And then we actually indeed were bullish. So not this candle, but the candle where it was actually 2 down, 2 down, 2 up. That was your stop. That was a better stop. So you can see you only would have risked $1 here as opposed to maybe like $1.50 here. So your stop stays there. You let the trade go up. It comes down. Be patient. We hit a low right here. This becomes your new stop. So we put a stop here. This would be stop number 2. Adjust it. So adjust it. And then you let the trade do its thing. It comes back down here. This is your next stop. And then we see a big move that happened. Because this move has several white candles, you know, we've moved the stop 3 times now. So stop 1, stop 2, stop 3. You can see the wave that's growing, right? So as soon as we broke below this candle, I would have gotten out here based on the 3-minute chart. So this would be stop 4 and exit. And this is red. Click OK. So these adjusted stops, these are based on the 3-minute chart, not so much the 15-minute chart. So you can see like how we use these charts together to get into position, because you saw a long wick, meaning that bulls were stepping in. You saw a doji candle with a long wick, meaning bulls were stepping in. And so as soon as we saw the bull stepping in around this time frame at 10:30, we waited for it to hit. Boom. Entry on the 3-minute. And then we would have been confirmed on the 15-minute. And if we go to the 30-minute, what time is this? 10:45. So if we go to the 30-minute, we'll see. Let's see. So the 30-minute, it's more conservative, but check this out. So 10:45 we said. Where's the time at? So if you move the cursor, you can see right here the time is changing right here. So we would have been around 272 before we got into the trade based on the 30-minute. And our stop would have been here at 270. So that had been about $2.10 risk to make. As soon as we saw this big wick here, we could have got out there, seen it come down to the body. We could have got out here. We saw this inside bar, you know, basically using the smaller time frame to make sure that we want to stay in the trade. And I think this is the best setup when you're looking at scalping intraday and you're looking at trades that's probably going to take between 5 minutes and 30 minutes. This is an ideal setup. But yeah, so we have our option chart, and let's change this here to the Qs. So I'll say this. We started the day, we went up a little bit. We hit a peak of 275.91, and then we came down to 270. So I would have looked for about a 273, 274 call to see if it was in my price range. And then I would have pulled that up on this side over here. So QQQ, 220617P264. All right, so that doesn't exist. So backspace. 7. Call 2, 6. You'll see the numbers pop up here. Right? So this was more expensive today. Let's see. Why does it look like this? Oh, 274. Wrong number. That looks better. Okay, so we said 1045. At 1045, we had a 2-2 bull. The same, look at that, the same price action. 2 down, 2 down, 2 up, that's bearish. We have a 2 down, 2 down, 2 up, that's bearish, followed by a bullish candle. So we had the same move happening basically. So our entry would have been above the break of this fake 2 up candle. So we would have gotten 91 cents or $91. We would have stayed in the trade until about 112. And so we come over here to about 112. So from 0.91 to 3.09, that would have been our profit with a stop that was here. So you would have risked $30 to make about $200. So that's not bad. Pretty cool trade today. But yeah, just wanted to show you how you can set up your layout so that as you start looking at, you know, different plays, this could be a pretty cool situation to, you know, help you see what's going on. For VIX, VIX works primarily with SPY. I think it's called SQQQ. That's the inverse of, yeah, so SQQQ is the inverse of QQQ. And so you can see basically, this is a 15-minute chart. If we zoom out a bit, need some more space. So looking at the same price action, it's basically the inverse. Down, this is up, that one's going down. Oh wait, this is the 30-minute. Wonder why I look crazy. Alright, yeah, so same price action, right? Goes down. So how do you use this? You would say, alright, I see prices going up, but I see a doji on the SQQ. So I'm gonna say whenever we get above 64, I'm gonna take my put. And so you've been taking your put here. Boom. It's the inverse. This is going up. This is going down. So we just walked through how to set up your Q play, your QQQ for smaller time frame, bigger time frame, the inverse chart, and the option contract. And then the same thing for SPY. You just change that to SPY, and then change this to VIX, and then change this to SPY contract. There we go.